Welcome back, new YouTube video, and today is the second video of the 4-video trading course that helped me to become profitable in these markets. And yes, it's tough, I all know it, but it's possible if you stick to a certain strategy, a proven strategy that makes money time after time. But you have to understand that trading is forever changing, the markets are forever changing, so we have to be adaptive to these markets. But what really helps is understanding what price is telling you, what the market is telling you, and what drives the market. In the end, liquidity. That's why we use liquidity as the main fuel for our trades, and this is how we go against the market. This is forever proven. I've back tested all the way back years and years ago, and it shows me that it's a consistent strategy that makes me consistent money. All right, today's video, we're going to dive a little bit more deeper into the hourly and 15-minute structure, understanding where the liquidity is, where to look for, the Asian range covered, and everything else that you have to need to understand. And slowly we will move into liquidity and lower time frame entries. But also what we will be covering in this video is what we are looking for the perfect entry to come, right? Not the execution, but what we need in order for us to be interested in a trade, right? Let's dive into the charts. Let's go. Okay, so last time we talked about higher time frame structure, higher time frame bias, and higher time frame liquidity. But if we really want to search for trades, well, obviously we have to dive into the lower time frames, meaning the hourly and the 50-minute. If we can understand what structure is telling us on those time frames, what liquidity is telling us on those time frames, we get a better understanding of where the session potentially will go. I've drawn a little example here on the chart. This is an example that, for me, this is an A+ setup. If I see this happening, well, it's just, I'm going to monitor it. If I see the 1-minute entry confirmations and criteria, I'm definitely going to enter. And you can see already the amount of liquidity that I have drawn out on the chart. And I will go into a live example later. Obviously, was a trade, shared with my community, all verified in the Discord. All right, so to understand it, right, we have bullish structure, right? So we're trading with the overall bullish trend. But when price comes into a supply zone and there is a resistance as well, and price comes and starts to slow down, people are trying to get into short positions. The reason people short from resistances, people short from supply, and people short from trend lines. And the trend line is one that I didn't have drawn out. We can draw one like this, trend line. Third touch of a trend line is where most of the traders goes in. So this is a little liquidity masterclass, right? By understanding where liquidity is. So we know when price comes into this supply and starting to step down and do a bearish break of structure, heaps and heaps of sellers will look for shorts from these areas. They see other confirmations like, hey, there is a resistance, double top, there is supply, there even is a trend line. This is going to melt, right? This is their thought process. And no, not for all, but this is what we need. This is the strategies we go against, right? So what I want is, I want this to be happening in Asia, a consolidation in Asia. What I want to see is when London opens, and an hour before London opens is where the most of the traps comes in. So I start trading an hour before London open. Monitoring an hour before London opens, not always a guaranteed trade over there, but you have to understand sessions. Sessions play a big role. I trade London session, you can trade New York and London, both have high liquidity, lots of volume in the market, right? So what I want to see from this area is an inducement of sellers, meaning that sellers are going to look for short positions. And when everyone is looking for short positions, we want to buy into them, into their stop losses. And this is an example. Price comes in, start consolidating in Asia, build up internal liquidity, higher time frame liquidity, higher time frame trend line, higher time frame supply, and then slowly starting to consolidate, building a support area. Sometimes there is even a potential trend line building up. When the support and when the trend line are taken, these are for me the confirmations to look for a long position in this case. Obviously, if we put this stuff on invert scale, it's the other way around. It's nothing different, right? This also means for shorts, and as much as it is the same for longs. So understand that you can easily use this tool, invert scale, to help yourself if you're better in longs and there is a short, just put it on invert scale. It will help heaps. All right, so how does something like this look on a live chart? Well, the example is over here. Again, don't mind everything else on the screen. We're focused on this type of pricing. What can we see? Price comes into supply. What do we have? A resistance on top, a trend line on top, and we have a little support area down below. What do we miss? The trend line. The trend line isn't here, but maybe there is on the 15-minute. But you can see that the hourly and the 15 minutes are playing a major role in understanding where the lower time frame liquidity is and how we can attack those areas and use that to our advantage to go in the opposite direction. All right, so the hourly, pretty obvious, right? We come in, starting to push up, create from this low a new high, breaks internal structure bearish. And what is that? It's inducing sellers. Again, this is what we really like to see. This is when something becomes a potential A+ setup. I say potential because we need 1 minute entry confirmations. Without those, it's still not an A+ setup. Easy. Right, so going into the 15 minutes, now we can see what is happening in Asia, consolidation. We can see this is the whole support area. In here, we are breaking internal structure towards the downside. Very nice, very lovely. We don't care. This is inducing sellers. There's even another very nice thing that I have not seen yet. There is a supply zone over here where price touches in Asia. This is giving those sellers even more confirmation. Now, we do have a trend line. It's not the cleanest one, but we have a low over here going into this low. So we have multiple liquidity areas. For me, the main reason is higher time frame. So one side needs to be induced on a higher time frame, but the other side, in this case buyers, should be trapped on the 1 hour and 15-minute time frame. Can also be 5 minutes, don't take it too serious, but they have to be trapped. How can we notice when someone is trapped? We have a trend line. Third touch of the trend line is where buyers come in. So potential trap. Support area is where buyers are buying from. So a trap. Let's see if we play price. Let's put it slow to see how it moves. Maybe a bit too slow, but you get the point, right? Comes into that area, drops down, inducing those, boom, takes all those people out. Now, what are we doing? We're doing a bearish break of structure, right? Understand structure. We're doing a bearish break of structure, inducing more sellers over here, giving the illusion, and boom, all the liquidity has been taken. Objective completed. This is an example of a perfect trade. So definitely interesting, definitely something to follow. Keep looking for those areas on your chart. Try to figure out where those areas are. Try to identify it and always understand that we trade London session / New York session. Timing is very important because pre-London traps are built. Pre-New York traps are built. Big institutions use market makers to induce people in. They use lots of volume and money to create patterns, to create resistance areas, to create trend lines. Yes, it sounds completely weird, but it's the truth, honestly. And it's not that they want to get our retail money. No, they want to take each other's money. Banks trade support and resistance. Bank trades SMC. Hedge funds do. Mainly using algorithms to trade it, and they trick each other in to take each other's money. We retail traders are small money. Honestly, we don't count. Obviously. So very interesting. Study this. Keep on studying it on different patterns. EU, GU, London Open. Try to see if you can find these areas. And in the next video, we're going to dive all the way into all the liquidity that's there. Full liquidity video. And after that one, we move into the entry criteria and how you can use this strategy to make serious bank. All right, don't forget to subscribe, like, and comment on this video, and I will see you on to the next one. Cheers.